Imagine applying for a mortgage, an auto loan, or even a premium rewards credit card and getting approved with the best possible interest rate almost instantly. That's the power of an exceptional credit score. While most people believe an 850 credit score is almost impossible to achieve, the reality is that thousands of Americans have already reached it by following consistent financial habits rather than relying on secret tricks. In 2026, lenders are paying closer attention than ever to your overall credit profile, not just a single number. If you've ever wondered what separates someone with a 680 score from someone with a perfect 850, you're about to find out. In this video, we're breaking down the proven strategies that financially successful Americans use to build elite credit over time. Whether you're starting from scratch or already have a good score, these principles can help you move closer to the highest level of financial trust. The first thing you need to understand is how your FICO score actually works. Many people obsess over checking their score every week without understanding what influences it. Your score is built from several factors, including payment history, amounts owed, length of credit history, credit mix, and new credit activity. Payment history carries the most weight, meaning one missed payment can damage years of progress. Your score isn't a measure of how wealthy you are. Instead, it's a measure of how responsibly you manage borrowed money. That's why someone earning $50,000 per year can have a higher credit score than someone making $300,000 if they consistently manage credit more responsibly. The biggest habit shared by people with excellent credit is simple but incredibly powerful. They never miss a payment. Even one payment that's more than 30 days late can remain on your credit report for years. Automatic payments have become one of the easiest tools for protecting your score. Setting every minimum payment on auto pay ensures that even if life gets busy, your payment history remains spotless. Many financially disciplined Americans also schedule calendar reminders to pay their balances in full before the due date, avoiding both interest charges and accidental late payments. Another factor that separates average credit from exceptional credit is credit utilization. This measures how much of your available credit you're using. Suppose you have $10,000 in total credit limits across all your cards. If you're carrying a balance of $5,000, your utilization is 50%. Which may signal higher risk to lenders. People with outstanding credit often keep their utilization below 10%, and many maintain it under 5%. That doesn't mean they never use their cards. Instead, they pay balances frequently throughout the month so that the reported balance stays very low when the statement closes. Many people unknowingly hurt their credit simply by closing old credit cards. It may seem logical to close an account you no longer use, but older accounts increase the average age of your credit history, which benefits your FICO score. Unless a card has expensive annual fees that no longer make sense, keeping older accounts open can strengthen your profile over time. Even making a small purchase every few months and paying it off immediately can help keep an account active while preserving valuable credit history. Another overlooked strategy is diversifying your credit mix. Lenders like seeing that borrowers can successfully manage different types of credit. This may include credit cards, auto loans, mortgages, or certain installment loans. That doesn't mean you should borrow money you don't need. Instead, if you're already planning to finance a vehicle or purchase a home, managing those accounts responsibly can gradually improve your overall credit profile by demonstrating financial reliability across multiple credit products. One mistake many consumers make is applying for several credit cards within a short period. Every application can create a hard inquiry on your credit report. While a single inquiry usually has only a small temporary effect, multiple inquiries over a short time frame may signal financial stress to lenders. People with elite credit scores tend to apply for new accounts only when they have a clear purpose, such as earning better rewards, increasing available credit, or supporting a long-term financial strategy. Monitoring your credit reports has become easier than ever in 2026. Under federal law, consumers can regularly review reports from the major credit bureaus and dispute inaccurate information if necessary. Errors happen more often than many people realize. Incorrect late payments, accounts that don't belong to you, or reporting mistakes can lower your score unfairly. Reviewing your reports regularly allows you to catch problems early before they affect major financial decisions, such as applying for a mortgage or refinancing an existing loan. Identity theft is another growing concern that can seriously damage your credit if left unnoticed. Criminals continue finding new ways to steal personal information, making credit monitoring more important than ever. Many financial institutions now offer free alerts whenever a new account is opened or a hard inquiry appears on your report. Responding quickly to suspicious activity can prevent long-term damage and protect years of careful financial planning. Building wealth and building credit often go hand in hand. People with exceptional credit usually have healthy financial habits beyond borrowing. They maintain emergency savings, contribute consistently to retirement accounts like a 401(k) or IRA, avoid unnecessary debt, and create budgets that allow them to spend within their means. These habits reduce financial stress, making it easier to pay bills on time and avoid carrying large revolving balances. Great credit is often the result of disciplined money management rather than complicated financial strategies. Patience may be the most underrated strategy of all. There is no legal shortcut, no hidden IRS loophole, and no overnight hack that instantly creates an 850 credit score. Credit scoring models reward consistency over many years. Every on-time payment, every responsible borrowing decision, and every month of keeping balances low contributes to building trust with lenders. Even if your score isn't perfect today, continuing these habits month after month can produce remarkable improvements over time. The most important takeaway is that an 850 credit score isn't just about prestige. It can save you tens of thousands of dollars through lower interest rates, stronger loan approvals, better insurance pricing in some states, and greater financial flexibility throughout your life. Start by paying every bill on time, keeping your credit utilization low, protecting your oldest accounts, applying for new credit only when necessary, monitoring your reports for errors, and maintaining healthy overall financial habits. Small actions repeated consistently create extraordinary long-term results. If you begin following these proven strategies today, you'll be putting yourself on the same path that many Americans with exceptional credit have already taken. Your future financial opportunities will thank you for the discipline you build today.